Good afternoon, everyone. Welcome to the One East Side Spark webinar series. Today is March 8th, 2022. My name is Christina Hudson. I'm CEO of One Redmond and founding partner of One East Side, and I'm going to be your host for the program for today. As a quick refresher, One East Side Spark is a regional recovery and resiliency center that is funded by federal grant dollars. This program is designed to help fortify your small businesses with the resources, the expertise, and any additional key areas of support. The goal of these programs is to help our businesses thrive and to withstand future economic crises. And Spark is a collaboration and a partnership. And I want to thank all those partners here you see on the screen. Our Eastside cities, our chambers, we're all partnered together to give you the highest level of support to our local business community. I want to thank everyone for all the work that they are doing. I want to quickly take a look at some of our upcoming webinars in March. The first is our with our partners Grow with Google. Next, we have an information session for our nonprofits on the new Give Big campaign that is coming up soon in about a month. And toward the end of the month, we have a webinar with the IRS where we will talk about best practices to use to avoid tax scams and common tax problems, employment taxes, and more. And a reminder, you can view all our programs on our website at oneeastside.org/spark. I want to also take a second to remind you of some of our newer offerings that we still have available until the end of the month, end of April. We are sponsoring one-on-one tax advising. This service is intended to support the smallest of our companies of 10 or fewer employees. This service is offered in English, Korean, Vietnamese, and now Spanish. And if you need to speak with the CPA on topics like the employee retention tax credit, we are sponsoring up to 2 hours with a Clark Nuber advisor. And you'll see here at the bottom how you can access these services either through our website or by emailing Samantha P at oneeastside.org. Some of the additional advising services we offer, we have a wonderful marketing expert, Daphne LeBlanc, that can work with you to help promote your business on social media. And for general business advising, you can contact Sean Palmer, the SBDC business advisor for East King County. And through Sean, you will have access to a network of a number of different advisors with various expertise. And I highly recommend that you carve out an hour of your time to meet with Sean. It's at no cost to you and is a great way to get high-level overview of your business to ensure that it is on the right track and hopefully stop any red flags that may be down the road. If you missed any of our webinars and want to get caught up, you can do that at any time, as all of our webinars are on demand at oneeastside.org/spark. And we cover a variety of different topics that you can watch and learn at your own pace. So, yep, we're going to get going on with our program. Today, we're going to be talking about helping your small business with long-term recovery efforts. Before we get started, I want to cover a few housekeeping notes. If you need technical help during the webinar, please use that chat box. We have staff on hand to try and help with any issues you might be experiencing. We also have links to pertinent documents in that chat box that you will be able to access. The resources we have here will also be available on our website as well as being included in a follow-up email to you. So during the program, if you have questions for the speakers, please use that Q&A box. Feel free to share all your questions here, and we will do our very best to get as many questions answered as possible right here and right now. And please note, the webinar is also being recorded, and we will send out a link as soon as it is ready. So we're going to go ahead and get going with the program. Today, we have Melanie Norton, Deputy District Director for the Small Business Administration at the Seattle District Office. Also, we have Connor McCarthy and Caleb Kim from the National Development Council. And now I would like to turn it over to Melanie.
Thanks, Christina. Good afternoon, everyone. I appreciate you so much for letting me on today to give a couple updates about the SBA, sort of a quick recap of our COVID recovery relief, but then looking forward and reminding folks about some of the other programs and resources we have as we are working toward a post-recovery scenario. So just as a reminder, the U.S. Small Business Administration is a federal agency. Our local Seattle district office, we have locations in Seattle, just across the other side of Lake Washington. And we serve Washington State and Northern Idaho. And we exist to help entrepreneurs and small businesses at every stage of the business life cycles, whether that's starting, growing, expanding, or like we've been focusing on the past 2 years, recovering. And if we can move to the next slide, I'd like to share just what that recovery has looked like. So during the past 2 years, nearly $1.2 trillion in COVID relief has gone to more than 16 million small businesses across the country. Just to put that in perspective, how much money that is, when you look at all the dollars that the federal government has spent in response to COVID-19 relief, so the dollars that have been spent and are out the door, about 1 out of every 3 of those dollars has been administered by the Small Business Administration through programs that you've probably become really familiar with: the Paycheck Protection Program, the COVID Economic Injury Disaster Loan Program, the Restaurant Revitalization Fund, the Shuttered Venue Operators Grant. All of those added up to $1.2 trillion. And actually here in Washington State, about $13.5 billion has gone to more than 184,000 small businesses. So no small feat. But as we're moving forward, most of our programs here have expired, where we're moving past that. And while there's no new applications, you can't submit a new application for our programs. We are continuing to process the COVID Economic Injury Disaster Loans. So all the applications that were submitted by December 31st, 2021, our disaster office is continuing to process those loans. Any of the targeted grants that were affiliated with that, those programs have closed out, but the core loan programs, we continue to process those. We also continue to process increased requests. So if you have an existing COVID EIDL loan and are eligible to have a larger loan, you can request an increase as long as funding is available. If you were declined, you can ask for reconsideration, and we can help you put together the package for that, what information you'll want to include if you're looking for a reconsideration request. And all this information is, we have new guidance about these things that are updated at sba.gov/EIDL. But also now, as we're moving out of the loan processing and into the servicing part of the loan, we're starting to get quite a few questions related to, okay, my deferment phase is wrapping up and my first payment's coming due. What do I do with that first loan payment? Or maybe there's been a change in ownership or an address change. All of these things that happen. If you have any of those other servicing questions about how to stay up to date on your COVID EIDL loan, we do have some of that new guidance at sba.gov/EIDL. I wanted to point people to. So as we kind of wrap up some of these COVID relief programs, we're pivoting more toward our core programming. And so some of these additional SBA resources that have always been available and are certainly continue to be available to help you move your business forward. So these can be to start, to grow, anything in these areas. And a couple that I want to point out because they're the ones we get asked about most frequently. The first being our funding and financing programs. And I'm glad you're here today because we definitely have some lenders on the phone or on the line that are going to be talking quite in depth about our 7A loan program specifically that falls under that financing. And they'll be able to talk you through all the different uses for that. SBA loan programs, whether it's $500 or $5 million and everything in between, a variety of loan programs are available for a variety of business uses. So that's certainly a program that's available. And in fact, just last year, we, in spite of COVID, we had a record-breaking year for our core loan program. So there was more than $1 billion in our local district here that went through our core loan program. So businesses are certainly taking advantage of these programs to start and grow, and hopefully it might be a good tool for you to use as well. In addition to our loan program, we have a surety bond program. So works similar if you need bonding for a project that you're bidding on, on, if you have an R&D that you're needing some funding for. We do have a variety of different funding and financing programs that a lot of people might not know about. And going to that SBA.gov funding programs is a great place to start to get to know those a little bit. Also, a big area of growth, especially with talk of the infrastructure package, is getting a lot of attention, and we're going to start seeing some of those federal dollars come down to local governments, and they're going to be looking for, hopefully, small businesses to perform the work on there. There's a lot of procurement opportunities for small businesses. And so helping get those small business certifications so you can qualify for some of those set aside contracts and reduce your competition is certainly a great opportunity coming up for growing your business that way and diversifying your client base. And of course, finally, technical assistance. And this is one, whether you're starting or growing or just hitting a rough patch. The technical assistance is a great way to help get that one-on-one business advising at no cost. And you heard some of the advisors, including our Small Business Development Center partner that was mentioned earlier. Please take advantage of these advisors. They can help everything from putting together a business plan, taking a look at your financial statements, or, with today's topic, they can help you prepare that package. So as you're getting ready to go talk to that lender about getting some financing, help be that second set of eyes to help you really look at your financial statements, your projections, making sure your business plan is in place, all those different things. It goes really hand in hand to have those business advisors work with you as you're working with lenders to get that financing. So certainly take advantage of those resources that are available to you. And let me just share a story about what this looks like in action with a local small business. This is Boom Boona Coffee, and Ephraim is a local small business owner who, had a passion for coffee and pulled from some of his roots to get into the coffee business. But of course, as he was getting going, he hit some of those challenges with getting access to financing. Even though he had a financing background, he was still, as a startup business, finding challenges with that. So he sat down with the SCORE mentor, which is part of our resource partner network. And that mentor helped him come up with learning about how to run a business and getting some of those other aspects under his belt, providing that technical assistance so that when he reached out to get a microloan, he was successful and used that to actually open up a physical location back in 2019. So with that, he was able to hire 15 employees. He saw his revenue grow 1,000% in just that first year. So sometimes just sitting down with someone can really help open up the doors where businesses know where they want to go, but those steps and how to get there, that's where those technical assistance resource partners can come in. So his business was growing really well. Hit a little bit of a challenge, to say the least, with COVID, but he was able to use PPP funds, and he was also able to get a COVID EIDL loan to keep his business going, and he's back on track and growing and looking at adding some additional locations. So, it's just one example of how using some of these different resources together for your advantage can really make a big difference for a small business. Now, I know that you came to talk about or to listen to some of the details of the 7A loan program and some of those loan programs for moving forward. So I want to make sure we focus most of our time on that. But if you are interested in any of those programs I just mentioned, or would like to stay in touch and hear about different programs or other things that come up, please stay connected with our local office. So whether that's subscribing for our email updates, following us on Twitter, visiting our website for information about upcoming webinars, or giving us a call or email just to talk with someone to get some answers on some of your specific questions. That's what we're here to do, is to help empower you to be successful at every stage of your business life cycle. So I think we're feeling optimistic about looking ahead, and let's get some good financing and the experts to help you do that. So I'll turn it back over to you, Christina.
Hey, well, thank you, Melanie, and your team over there for all the work that you're doing. It's been, I know, just amazing work. Thank you. Thank you. So our next speaker is Connor McCarthy and Caleb Kim from the National Development Council. So I guess, Caleb, should I start with you? You're the first picture on the screen, or do you want me to start with Connor? Which one?
I'll start. Thank you, Christina.
Okay.
So, hello, everyone. Thanks again for joining us today. I'm Caleb Kim, currently serving as the lending officer for Grow America Fund, specializing in transactions up to $5 million. However, our sweet spot is transactions between $100,000 to $3 million for various purposes, whether it's for equipment or inventory purchase, debt refinance, commercial real estate. So Grow America Fund is a small business lending arm of National Development Council. And just to give you a brief background on the company, NDC has been serving the small businesses and client communities for the past 50 years, with their work focused on providing access to capital for underserved communities. So when it comes to SBA lending, many small businesses and entrepreneurs were recently introduced to SBA lending via the infamous Paycheck Protection Program and Economic Injury Disaster Loan Program. As this generation and future generations will most likely remember this program as PPP and EIDL. In fact, it was a great program that provided financial assistance to small businesses that needed urgent support in managing the economic impact of the COVID-19 pandemic. However, SBA loan programs such as 7A and its qualifications is not similar to PPP or EIDL, which doesn't focus on subject businesses' payroll or negative impact of COVID-19. Rather, the overall strength of the business, which we will dive in later on the presentation. Now that these programs have ended, today's focus is to prepare our audience to utilize the SBA 7A as part of a long-term recovery solution. That said, on this talk, we'll discuss the following. 1, SBA 7A loan. What is it and its eligibility requirement? 2, documentations required for a full application. And 3, brief snapshot of lender's cash flow analysis. Note my colleague Connor, currently serving as one of the managers at Grow America Fund, will provide details on this section. That said, let's touch on SBA 7A eligibility by going over eligible businesses. SBA is a great program for small businesses looking for financing, but please note, not all businesses will qualify based on its industry. SBA 7A eligibility that the subject business must be registered as for-profit business and must be operating legally. General rule of thumb is that the business must have fewer than 500 employees and less than 7.5 million in revenue on average each year for the past 3 years. However, size standards and revenue and numbers of employees used to define small businesses or small business varies depending on NAICS industry code. For example, construction company may show up to 39.5 million in revenue and still qualify, and food manufacturing business can have up to 1,000 employees and still qualify as a small business. Your business must be physically based in the US, and you must be doing business with the US and its territories. Note there are certain industry restrictions that can make such businesses ineligible for the loan program. Example, gambling, government-owned organizations, for example, government funded, lending firms, for example, banks, factoring operation, leasing companies, non-profit organizations, multi-sales distribution, religious institutions, and speculation-based businesses, for example, R&D stage. Now that we went through a list of ineligible industry, let's turn our focus back to eligible industries. Per SBA guideline, eligible industries include assisted living facilities, motels, hotels, restaurants and bars, retail stores, service industries, examples, plumbers, laundromats, dry cleaners, auto repair shops, preschools, daycare, self-storage, gas stations, and convenience stores. With that said, again, who could apply? Small businesses for who the businesses that we just went over. SB 7A's maximum loan amount is up to 5 million, and rates generally varies. Prime plus up to 2.75, which is a max. With current rate, that'll put place the rate at 6%. Just note that it's often lower. Terms typically is anywhere ranging from 10 to 25 years. Typically 25 years for real estate. Security and collateral, business and personal guarantee is required. And eligible use, again, it could be loan proceeds can be used for working capital, purchase of furniture and fixture, machine and equipment, leasehold improvements. And it could also be used to refinance eligible debt and also real estate acquisition. Moving on to next slide. Documentation is required for full application. Samantha, could we move on to the next slide, please? Next slide. We covered that. Next slide, please. So if everyone can see the screen, there's a couple of documentations that's required for a full application. The ones highlighted in red text, these are a must. I would recommend any small business owners considering SBA 7A financing to prepare these documents in advance. Typically on a personal side, we would need most recent 3 years tax return, personal financial statement, and there's a few other forms that's required, such as resume, credit release form, government issue ID. Note that the ID needs to be valid. SBA form 1919 is the borrower's information. And from the business, we would also need most recent 3 years, as well as updated interim financial statements. Interim financial statements, P&L, and balance sheet. Business debt schedule is very important if we're looking to refinance the debt. If not, it is still required. Copy of lease agreement is very important when it comes to retail businesses, such as restaurants, retail clothing store, you name it. Business plan is important if it's a startup. Again, projection. Business plan and projection is very important when it comes to startup finance. So now that we covered documentation is required for full application, we will move into a brief snapshot of lender's cash flow analysis. So typically, what does it mean? Or how do lenders look at a loan request? There's few things that's very important when it comes to underwriting a loan request. We call it the 4 C's. 4 C's stands for cash flow, collateral, and capacity. So again, once a small business submits a loan request, these are the things that factors that lenders or underwriters typically take into account in making a loan decision. And with that said, I'll have my colleague Connor dive in and give us a snapshot of what that cash flow analysis looks like. Connor, pass the mic to you.
Thanks, Caleb. Can we advance to the next slide, Samantha? So this isn't really kind of a tried and true, but we just wanted to give everybody on the webinar a sense of how a lender will underwrite based on business cash flow analysis in order to get a sense of what might work or what wouldn't work. And specifically, when a business owner presents their historical financials and interim financials, the lender is going to put together a business cash flow based on those historical and interim financials, and also put together, as you can see in this business cash flow, a projected cash flow as well. The goal is pretty simple. They're going to take net income and add back non-cash expenditures such as depreciation, amortization, add back interest in order to not double count that interest, since it will be subtracted out at the bottom part of this business cash flow. And then they're going to make add backs from time to time if and when needed and when appropriate. But basically, and this webinar isn't designed to make anybody into an expert, but basically what they're looking for is $1 of cash flow for every $1 of debt service. So if we look at this slide right here, the cash flow all adds up to have total cash flow at the top part of the cash flow chart. And then they're going to put together an assumed debt service, which is basically an annual debt service associated with the proposed, in this case, SBA 7A. We talked about, for this business cash flow, as Caleb was referencing, kind of one of our sweet spot loan amounts, which is $200,000 at 5.5% interest over a period of 10 years. And that would annualize to a new debt service of $26,600, which is really just 12 months of principal and interest payments at $200,000, 5.5% interest in a 10-year term. Of course, too, then if the business took any distribution or anything of that nature, that too would be taken out of the cash flow along with the existing debt service, if there's any debt service that was shown on that business debt schedule that Caleb referenced earlier. And very simply, we're looking for $1 of coverage to $1 of debt. From time to time, we'll want that to be higher, especially through the projected, but as National Development Council and our lending arm, Grow America Fund, is a CDFI, and we're oftentimes looking to, of course, get that SBA guarantee. We'll try to be as aggressive as we can with that cash flow coverage ratio and make sure that we can get a deal done where other lenders might not get a deal done. Again, this slide isn't designed to make anybody an expert, but certainly to give you an appreciation of how business cash flow is calculated when we look at that historical business financial, that interim financial, and when we look at the projection that the business owner will put together for us. Let's advance to the next slide, please, Samantha. As Caleb was also referencing, we're going to collect some personal financials, and we're going to collect not only a personal financial statement, but also personal tax returns. And what we're going to do with those personal tax returns is put together a personal cash flow analysis. We're going to look for sources of household income that could be salaries and wages from W-2 income, whether there's income that the principal is taking directly from the business, or whether there's outside spousal support if a spouse is working outside of the business. We might add in income from rental properties in the form of Schedule E income that we see on a personal tax return. We might add in additional odds and ends, such as a Schedule C income or other income that we see from time to time on a personal tax return. We'll take that data and then we'll calculate our total income. And then in turn, what we'll do is we'll look at household expenses and come up with a calculation of mortgage payments, income taxes, auto and lease payments, student loans, credit cards, and all kind of the odds and ends that everybody knows that goes into a annual personal budget. And we'll put together this personal cash flow in order to understand at kind of a very deep, holistic level that the principals can support their personal living expenses in addition to supporting, as we were discussing in the prior slide, the proposed debt vis-a-vis the business cash flow. So it's two sides to the way that a lender will look at any application. There's going to be a business cash flow analysis, but there's also going to be a personal cash flow analysis in order to determine that principal or principals can cover all the personal living expenses with the sources of income that they have on hand. Let's advance to the next slide. Thanks, Samantha. Another key consideration as we kind of move through those C's is, in addition to cash flow, we're going to look at collateral. We are going to follow kind of the tried and true rules with regards to SBA and with its SOP. And the SBA has a very simple rule when it comes to collateral, and that's that they request that a business owner, or rather a lender, as they're assessing an application on the part of a business owner and a business, that they take any and all available collateral. From time to time, that could mean an owner's primary residence, so just prepare yourself for that discussion. It could mean, and oftentimes does mean, new machinery and equipment that could be acquired with the loan funds that are being proposed. It could be existing assets and business assets such as inventory and accounts receivable. The brilliance of the SBA program is that here, if we look at this collateral coverage ratio, there's actually a collateral gap or deficit of 87,500. And that SBA guarantee and the SBA program will allow us still as a lender to do this deal, even if there is a collateral gap or deficit collateral. So that's all a long way of saying that collateral is an important thing to analyze, but part of the reason that the SBA program is so effective and important is because it allows lenders to do deals where there are collateral gaps. and still go forward with a potential loan approval. Let's move on to the next slide, Samantha. So, just to kind of put everything into far relief, we've talked about now the business cash flow, we've talked about personal cash flow, we've talked about collateral. There's also a really critical other series of C's in these 4 C's, which is character and capacity. And character can be assessed and underwrote in a lot of different ways. The lender is going to perform background searches, personal and corporate business history searches and questionnaires. They're going to take down a summary of client and vendor relationships after speaking with the business owner. They're going to look at personal credit reports and personal financial statements. And they're also going to conduct a site visit and maybe even call around and look for personal and client references. So with regards to character, when you work with your lender, be upfront, be forthright. The lender is going to want to know if something happened, why it happened, and of course, if it's something bad, why it's not going to happen again. But this is all a long way of saying that when you establish that initial relationship with your lender, be sure to be honest and forthright at the beginning, because there's so many different layers and levels at which there's going to be cross-checks and verifications that even if it seems like something minor that you didn't want to mention, chances are it's going to be discovered through the underwriting process. As far as capacity is concerned, capacity for the existing business is going to be underwrote by an analysis of the business balance sheet and a P&L statement, and looking at that debt to net worth or that equity investment to net worth. The lender is going to do an assessment of working capital, which is current assets less current liabilities, specific to that business balance sheet. They're going to look at key staff and make sure that all those key staff are in place, or that there's plans if a key staff person is left for the succession of that person. They're also going to look at what the long-term succession planning of a business is. Oftentimes that's something that seems far out, but certainly if you're being extended a 10-year loan or even a 25-year loan for real estate purchase, that's something that will be part of the discussion in order to assess the risk and make a decision. They might ask for resumes and succession plans as needed from time to time. I'd also just emphasize too that part of what's great about a 7A loan is that it can be used for a startup business and can be used to extend term debt to fund build out of a space or initial working capital for the operating expenses related to a business getting off the ground. So it's pretty versatile and can be used for a lot of different startup purposes. But that's all a long way of saying when you start thinking about a startup business for a 7A, just remember that the lender is going to be assessing some of the items that we've discussed today, but perhaps even some additional items as well too. So that lender is going to be looking at the owner's relevant management experience. They want to make sure that if you're starting a business in a specific industry, that you have industry experience. So if you want to start a restaurant, hopefully you've worked in a restaurant, and so on and so forth. They're going to also look at that business plan and make sure that the plan in place, since there is no historical record or performance of this business, makes sense, and that you've thought through all the possible contingencies and exigencies that are needed in order to run this business. They're going to look at evidence of cash available as an equity contribution, and oftentimes they're going to ask for an equity contribution. The theory is simple, that if the term debt of the lender is being utilized in order to assist in the opening of the business, then they want to also know that the cash of the potential owner, or rather the cash of the principal, is going to be in there as well too. That your skin is in the game, if you will, as much as the skin of the lender is in the game. So these are some of the things they're going to start thinking about when it comes to a startup business. Let's advance to the next slide, Samantha. I would just emphasize too that this program is really effective. I really appreciate it that we were talking earlier about the fact that SBA, not only through its use of PPP and EIDL, had a incredible hand in the recovery in the face of COVID, but that also its core programming of 7A and 504 also had a banner year last year. We too have seen a lot of success even through the pandemic with the 7A loan. And just one thing to highlight here is that even in a state of Ohio, which was impacted by closures like most states, we were able to still close and work with a business that needed SBA 7A financing through the pandemic. And so we're looking forward in the long term too, as business owners see their way out of the pandemic, to be able to extend additional SBA 7A loans, hopefully just at the same pace as what we've seen in the last few years, because obviously the need is there for business owners to access this type of financing within the small business lending space. Let's advance to the next slide, and I'm going to hand it off to Caleb at this point.
Thank you, Connor. Again, as Connor noted, SBA 7A is a great program where loan proceeds could be used for multiple purposes. It is considered one of the flagship loan program for SBA. However, the slide shows that there's few other programs that small business owners could take advantage of. Again, National Development Council is one of the few non-bank lenders out there that's able to underwrite and approve SBA loans. We typically specialize in transactions 100,000 to 3 million. But again, the deal that Connor just shared happens to be one of those deals that falls in that within our specialty. So moving forward, we love to be a resource for any small business owners looking for financing. So please feel free to reach out. With that said, I'll open to questions.
All right. Well, now it's, as Caleb mentioned, we're about to begin the Q&A portion of the program. I do want to remind you that we are recording this webinar, and we will send out a transcript of the questions and answers with the links to the webinars, the slides, and the resources as a follow-up to you. All right, so our first question asks, is there a minimum credit score to qualify for an SBA loan? And I guess maybe that go to Caleb or Connor.
I can take that one. Or Caleb, why don't you jump right in? That's fine too.
No, go ahead. I'll chime in.
Yeah, I think that one of the important parts about the program is that it's there in order to assist businesses that otherwise wouldn't have access to credit. And so if something happened with your personal credit, the real important part is just that you're upfront with the lender. They're going to want to know what happened, why it happened, and more importantly, why it's not going to happen again. So it's not necessarily that there's a minimum or floor with regards to personal credit, but it's critical that you're upfront with that lender in order for the lender to best understand what happened and explain that, and hopefully get towards an approval and be able to move past it.
Okay, great, thank you. All right, we have another question asking, can I use retirement funds as a down payment?
I'll take that.
Okay.
I'll take that. I mean, it all depends on the scenario. Again, we recently had a client looking to purchase a business, and they were looking to transfer some money from their retirement. It also depends on the lender that you're working with, but typically answer to that, it's case by case, but most of the time it will be approved.
It will be approved, right?
Yes.
Okay, great. All right, we all have another question asking, it's from John, is the SBA helping American businesses which are facing economic hardship due to the recent sanction against Russia? And maybe this is a Melanie question.
Yeah, hi, John. I haven't seen any programs that are specific to that situation. But maybe I can, if you want to email our box and maybe you can tell us a little bit more about what the specifics of your situation are. And maybe we can find a program, if not from us, one of our partners that could help you with whatever is the specific impact you're facing. So I think that was the info, S as in Seattle, D as in district, O as in office at sba.gov. Go ahead and email us and we'll see if there's something we can do to help you out with the impact you're facing there.
Thank you, Melanie. And we'll make sure to put that email address in the chat box as well and include it in the follow-up materials.
Christina,
yes.
Christina, real quick, this is Caleb. Just to give a little more clarification regarding the funds coming from the retirement fund. I'm assuming, let's say a loan scenario is client looking to a purchase business, right? And that down payment is coming from that retirement fund. If the client is, I'm sorry, talk to me. If the client is retired, again, if they're not borrowing against those funds, then again, the chances are it'll be approved by the lender. However, if they're borrowing, the general rule of thumb is that whether it's a commercial real estate purchase or business acquisition, the equity injection portion cannot be borrowed. So in essence, you can't not borrow to borrow. I hope that provides clarification.
Yes, I think it does. Thank you. Thank you. All right. Our next question asks, what happens to my loan if I decide to sell my business? Would that be a Connor question?
I can take that. Yeah. So generally speaking, the simplest way to think of that is that if you do sell your business, your loan would have to be paid down with your lender. There are exceptions to that. And there could be explorations of the new management assuming the responsibility specific to that loan. But I would just emphasize that sometimes that's a very specific process, and that generally speaking, the way that would be resolved is that the loan will be paid in full before the sale of the business.
All right, perfect. All right, our next question asks, how long does the underwriting process usually take? I'm thinking maybe Caleb?
Yeah, I'll take that. Underwriting process typically takes anywhere from 30 to 45 days on average. However, it could take longer. It all depends on the type of transaction. As Connor mentioned, when it comes to underwriting, I would highly recommend all small business owners looking to get financing, especially through SBA, so just be transparent upfront with your lenders that you're working with. Because during the underwriting process, a lot of things will rise. As long as you're upfront and you uncover all the hurdles upfront, then things will move rather rapidly and smoothly. However, a lot of times, in cases that when the borrowers are not transparent with the lender, there are a lot of, you could expect a bumpy road. So just to make sure everything moves on a timely manner that clients expect, which is again 30 to 45 days on average, I would just highly recommend, again, just be transparent and upfront.
All right, thank you. All right, our next question from Becky asks, when applying for a 7A loan, must all shareholders of a corporation provide the required personal finance information, or can just one shareholder provide that?
I can take
that question. You want to do that one, Kelly?
No, go ahead, Connor.
These are good questions today. I'm really enjoying them. So anyways, generally speaking, the financial information of all of the respective shareholders will be collected, although I would emphasize that personal guarantees are only going to be required for those owners that are 20% or more. So that could change too if a individual or a person is a key staff member. The lender might require their personal guarantee as well too. But just kind of a high level answer to that question so that you can get a better sense of how people would approach that, more specifically how your lender would approach that.
So just 20% or more ownership, right?
For the guarantee.
For the guarantee. Okay. Okay.
The lender most likely is going to, in fact, will request the financial information of smaller owners that have potentially 5 or 10 or 15% ownership.
All right, perfect. Thank you for that clarification. All right, our next question asks, how is a 7A loan different from one I would get from my bank? Is there a more rigorous vetting process?
I could take that. So every lender is a little specific in terms of their underwriting. So for example, 7A, generally speaking, had to abide by what we call SOP, standard operating procedure, that SBA has as the guiding source for all SBA lenders. However, to answer that question, for example, certain banks, although they have a great SBA program, they might not be able to service certain industry. whether that'll be gas stations, C-stores, motels, hotels. And certain lenders, again, that might just be their specialty. So generally speaking, it varies lender by lender. I hope that answers the question.
I think it does. Thank you. All right. The next questions asks, can an SBA loan be combined with other types of loans?
The simple answer to that is yes.
Okay. I think that works. That was a yes or no question, right? All right. So we have another question here. It asks, can I use my 7A loan to pay down my business's credit card debt?
I can take that one, Kel, or do you want to take it? I'm fine.
Go ahead, Connor.
Why don't you, Kel? We have a good ping pong ball going back and forth. You take that one.
Okay. I guess to answer that question, loan proceeds again for 7A could be used towards debt refinance, which is again one of the most popular or a way that people utilize the loan funds. However, when it comes to credit card, just note that when it comes to debt refinance, there's a few supporting documents that's required from the lender. One being the original loan agreement, and the two, payment history. So again, when it comes to credit card, that's one of those things that where lenders and borrowers are both at a place where there's going to be a lot of documentation requirement. I think in my last 10 years of lending, I've probably only touched about one or two debt refinance requests where it was partially a credit card. There were a lot of invoices you could only imagine to justify that it was used for the business purpose. Again, when it comes to credit card, that's again, the guidelines could vary from lender to lender, but general rule of thumb when it comes to debt refinance, as a supporting documents, you need to provide, number one, the original loan agreement that the debt is being refinanced and the payment history.
All right, thank you. All right, our next question asks, can you talk about microloans? Is there different eligibility criteria and how are they different overall?
Connor, do you want to take that?
Yeah, I mean, I think that with regards to microloans, a lot of the program parameters are going to be very similar, but specific to that program, there'll definitely be probably some incentives or some reasons that program might be more attractive than a 7A from time to time, depending on the business. But with all these respective programs, whether that be a 7A, a microloan program, or a 504, I would just encourage everybody to kind of reach out to your lender, explain your business to them, and then hopefully your lender, depending on the programs that they have available, will make a series of offers to you or a series of discussions or structures with you in order to think about what may make most sense to you. What I think Caleb and I really enjoy about the 7A is that it's very versatile, so it can be utilized for a lot of different sources and uses, such as real estate purchase, working capital, refinance of high rate debt, like Caleb was describing, purchase of equipment, and so on and so forth. So of the respective programs, it really is attractive in the sense that it has so many different uses and has attractive terms and rates on top of those interesting uses that can be utilized.
Yeah,
Excellent.
Christine, if you want, if I jump in on the microloan, just
Sure.
add one more thing to that. So, with some of the SBA microloan programs, one of the things that's nice about the way we've developed it is, I'm sure you're going to have a little bit, a lot of the same rules, like Connor mentioned, a little bit more flexibility, but they're often paired with the technical assistance. So it's in-house. So the person that you're working with to get your microloan is also part of your technical assistance program. So they usually work hand in hand. And so we find that because our microloans tend to be either startup or early stage businesses, which is why they need that smaller amount of capital. So it's a nice way to get that technical assistance to kind of help you build up and get you to the point where you're a little bit more bankable, and then can graduate, if you will, get your business up to that 7A level. So it's kind of a nice way to kind of warm up and build, if you will, to get to that 7A level for the next step.
Ah, that makes sense. Thank you. Good addition. Thank you, Melanie. All right, our next question asks, can I use the 7A loan to diversify my business, change the nature of the work we do, such as expand my business to include food delivery service? Is that a Connor question?
I think Caleb and I could either answer that. But we'll do a simple answer on that one too. That's yes. So
Okay, all right.
you can definitely use it to diversify and expand, to utilize it to get into potentially another line of business, or to try to expand your core business. In this case, food delivery would be an eligible use. You probably could get potentially some working capital to fund the upfront costs associated with trying to get that line of business off the ground and running.
All right, perfect. Thank you. I like simple answers. All right, our next question asks, is it better to apply for the loan through a credit union?
I'll take that.
Okay.
I wish there was a simple answer to that question, but again, as I shared, every lender is different in terms of their credit appetite. So if whoever you have relationship with, whether it's a bank or credit union, I would highly recommend reach out to your bank of deposit first, whether again that's bank or credit union. And again, we're a non-bank lender, so in case things don't work out, please use us as a resource.
Yep. All right. Okay, I think this next question is probably from Melanie. It asks, I received an EIDL loan last year and would like to request an increase. Is there a deadline for applying for this increase?
Good question. There's not a deadline, but it's just until the funding for that specific program runs out. Which the latest we've heard, we're in good shape. There's still a healthy amount left. But with that said, if you need it, I would start the process as soon as possible, because you never know. And I never want anyone to miss out on funding that they could use. So the next best step would be to log into your portal. And usually there's a button where you can request an increase, or you could also email for an increase request. But that EIDL URL that I posted or shared earlier, that will also have some step-by-step information that's easy to follow. But usually the easiest, log into your portal and start the process to request that increase, and then kind of go from there.
Okay, perfect. Thank you. And I just want a reminder, if you have any questions, please put them in the Q&A. And I think we're getting down to the last of our questions. So again, put it in the QFA if you have one. All right. The next question asks, can we use the 7A loan to open a factory overseas?
A simple answer to that will be no.
Okay. All right. All right. I think this is our last question that I have so far. We'll see if any of them come in here. We have the question that asks, is it better to apply for a business loan or a business line of credit?
I'll take that one. Specific to the question that's being proposed, I think you'd really have to ask yourself what you're trying to fund. So if you're trying to fund something that's short-term in nature, like the lead time associated with a receivable or a piece of inventory that's going to be utilized immediately in the production of a service or a good, or really just a good because it'd be a piece of inventory, then generally speaking, that's going to be well paired towards a line of credit. If you're looking for something that has a longer use, an asset that's going to take a longer period of time to be utilized, perhaps you're trying to buy a piece of equipment, or you're trying to fund leasehold improvements, then that's when you're going to use term debt. So just start getting into the process of matching the asset that you're going to be funding with the type of facility that you're going to be funding it with. So short term is generally line of credit, whereas a long term use would be paired with a longer term piece of term debt in the form of a 7A loan.
All right. Thank you. So I'll give everybody a couple more minutes to think of their very last question. And as we're waiting for that, hopefully we'll get another one. I want to actually go to each of our speakers. And if you want to give us some last words of advice or wisdom or thoughts that you might have. And Melanie, why don't I start it with you?
Thanks. I would say just know that you're not alone. I think it can feel very lonely as a small business owner, and you have the weight of your world on the shoulders with your customers and your employees. And there's just a lot, especially given the past couple of years, that's weighed on us small business owners. And so just know that whether it's your lender or a resource partner or whoever it is, the folks on this call and the networks that we're all part of are very sincerely invested in seeing you succeed. So please take advantage of utilizing this network that you're connected to, and don't go at it alone, because you don't have to. There's a network here to support you.
That's excellent. Excellent, Melanie. Thank you. All right, let's move to Caleb.
Melanie, just to piggyback off what you just shared, I just want to encourage all the small business owners out there. We're all in this together. There's a lot of resources available out there, especially if you have a chance to visit the SBA's website. Again, there's a lot of resources that business owners could take advantage of. So again, I encourage all small business owners to just kind of keep your head up and keep pushing forward.
That's great. That's good advice, Caleb. All right, Connor, to you.
Yeah, I think in building on what Melanie and Caleb are saying, that a lot of what a business owner goes through is unique to them and to their story. And so find a lender that you can tell your story to and who will listen to your story. And then find a lender who in turn is going to go advocate for that story and, develop a relationship with them so that you're working with them, not just on a transactional basis, but in line with that kind of theme of the story that's going to be with you through 1 or 2 or 3 or 4 years or even longer and on multiple transactions, because I think it's critical that you have somebody that will value that. And every business owner has nuance and detail to what they're doing, and you need to find a lender that's willing to take the time to tell the nuance and detail of that story.
Exactly. Thank you, Connor. And yes, and all of us here at One Eastside Spark, again, a reminder, we do have these dollars coming from the federal government to help us offer these no-cost advising services. Definitely you should take advantage. I know you're busy running your business, but take that time to make an appointment with one of our advisors, because it can be really helpful for you down the line. We've had a few people that have contacted us at the 11th hour when they're in a dire situation, and the sooner the better that you connect with your business advisor, and again, at no cost to you, because our goal at the end of the day is to make sure that our small businesses will be resilient and thriving as we moved through and past the pandemic. So all right, so this concludes our program for today. And I want to thank Melanie, Connor, and Caleb for giving us your time and expertise today. We appreciate you all very much. I want to say thank you again to all our partners on the East Side who are working hard to support the business community. And I want to make sure you bookmark this site, www.oneeastside.org/spark. There you will find key resources, information on our one-on-one advising, our weekly webinars, and grant opportunities as they become available. And a big thank you to all of you for participating in our webinar today. So until we see you again, this concludes our program. Thank you.